Hello everyone, welcome to Akira's Academy of Accounting and Finance, and today I'm again with three new terminologies: depreciation, amortization and depletion. Okay, now before I explain you these terminologies, let's do a recap of certain things. Now, we all know that the organization prepare financial statement, right? There are liabilities, there are assets with the organization. Liabilities which the organization owe to somebody else, right? And asset is something which the organization owe, right, which is going to give them future economic benefits. They have control on them, right? Now the assets have been categorized into two groups: non-current assets and current assets. When I say about current assets, what are current assets? Inventories, our stock, right? The debtors, bills receivable, cash in hand, cash at bank. I have given loan and advances. They are short-term loans and advances, and they are going to give me back within 1 year. So something which is going to get converted into cash within 1 year is considered as a current asset. What are non-current assets? Opposite of it, more than 1 year. Okay, they are going to reap future benefits, but they will they get encashed after 1 year, right? Now what comes under non-current assets? Our fixed assets, non-current investment, long-term loans and advances. When I say fixed assets, okay, what are fixed assets? You have read this terminologies. In fixed assets there are tangible assets and intangible assets. Okay, now what are tangible assets? Something which we can see, which we can touch, right? Mobile phones, right? Your bikes, your cars, you can see them, you can touch them. Similarly, in an organization there is a building, there is a plant and machinery, there are motor vehicles. So these things they can see, they can touch, so that are considered as a tangible assets, right? What are intangible assets? Intangible assets means which we cannot see, which we cannot touch, but they are giving benefit to the organization. They are considered as intangible assets. What are those intangible assets? Goodwill, patent, copyright, trademark. What are all these and why I am using this? I'll explain you later. First, let's go to the tangible assets. Now we all know that about the going concern concept. Okay, when we studied generally accepted accounting principle, there was a concept known as going concern concept. What does that going concern concept shows? Says that when an organization has started its business, it is starting with an intention of continuing for a period of more than 1 year, right? So whatever investment that organization is doing, there are certain things that an organization is investing on, like they are buying a building, right, to run the organization. They are purchasing certain plants and machinery, they are buying certain furnitures and fixtures. Now those things don't get used within 1 year, right? We can't charge them as an expense for 1 year. If I am buying a building worth rupees 50 lakhs, 50 lakh I can't consider as my expense of that particular year, because that 50 lakh is of building is going to reap me future benefits, right? And I am going with a concept called as a going concern. So what I will do, I will capitalize that 50 lakh amount. Okay, that is considered as a capital expenditures. We studied the terminologies revenue expenditure and a capital expenditure. So the expenditure incurred for which future economic benefits I am going to reap is capitalized. Okay, like building, plant and machinery, furnitures, fixtures, motor vehicles, they are going to be used later for a period of time. Now if I am using those things, right, I am using it for my business for a period of time, but I am using it for the current year. Okay, so I am capitalizing the whole amount, but the certain amount I need to charge it as a revenue expense for that particular year, because that particular machinery is giving me a benefit in this current year also, right? If I am manufacturing certain goods, that goods are being manufactured in the current year, which is giving me a benefit, so I can charge it as an expense. Let's say I am purchasing a machinery worth rupees 50 lakh. Now this 50 lakh I can't charge it as an expense for the current year. What I will do, I will capitalize it. But I am using this machinery, okay? Now this machinery will give me benefit for, let's say, 10 years. So for the current year, I can charge 5 lakh as my revenue expense, okay? Because this machinery is giving me a benefit in the current year, right? So this 5 lakh I can consider it as my revenue expense. Now what is this 5 lakh called? This 5 lakh is called depreciation. The machinery depreciated because of this use. It's not necessary if we buy a machinery and if we use it in the particular year, then only it gets depreciated. Even if we don't use it, still it, we can charge depreciation. Likewise, if I say there are certain technologies, right? Let's say your mobile phone. I got OnePlus 15 now, right? But I have not even used OnePlus 15, and in the very next month, in the very next day, don't consider it as a next month, in the very next day itself, OnePlus launched a new version, OnePlus 15 Pro or OnePlus 16. The value of OnePlus 15 diminishes, right? If it is in a seal packed box also, okay, if I have not even opened it, and in the very next day the new version comes, and if I go to sell that OnePlus 15, I'm not going to get the full amount, okay? So the change in technology, because of the use of those things, that particular asset depreciates, okay? And we can charge it as an expense. Why? It is going to give us tax benefits, right? That your organization's profit amount reduces. What we do, we consider income as well as expense. Whatever income is there, we deduct all the expenses, and then what we get? Profit, okay? What we get? Profit. On that profit, what the government charge? Tax, okay? But if the profit amount is more, obviously the tax amount will be more, right? But depreciation, though it is a non-cash expense, I am not giving as a cash to anyone, still it is considered as an expense, and I can charge it. I can deduct the depreciation amount, and this will be my PBT. PBT means profit before tax. What is this? This is profit before depreciation and tax. This is profit before depreciation. I can deduct it as an expense, and on that profit before tax, tax will be charged, right? So it gives benefit in that way also. So on the assets, which assets? Tangible assets, building, furniture, plant and machinery, vehicles, all these are something which we can see, which we can touch, and on the use of it, we charge a certain amount which is known as depreciation, right? Second is intangible assets. Intangible assets which we cannot see, which we cannot touch. What are those intangible assets? Goodwill, patent, trademark, copyright. Okay, there are intellectual property rights and other things, but let's focus on these four: goodwill, patent, trademark, copyright. These are what? These are intangible assets. Now, what is a goodwill? When you go to the literal meaning of goodwill, what does it say? It is the name that a business has created, right? I am running a business. I have put on efforts, and because of the name, because of the my ethics and everything, whatever business I have created, people are coming to me and buying things from me, right? Now this is the goodwill that my business has created, and because of that people are coming. Now this is what this goodwill is self-generated goodwill. This goodwill I cannot capitalize. I cannot say, okay, this is the goodwill I have created, I will charge it, consider it as an asset, and I will show it in my assets. No. Self-generated goodwill is never capitalized, right? But let's say there is a shop near to me, right? I am running a shop, there is another shop near to me, but my shop is running, really good. Okay, people trust me, people come here, buy things for me. Now I am shifting to some other place, right? Want to sell that shop. Now when I sell that shop, if somebody comes, the market value of my shop, of that particular area shop, is, let's say, 1 crore. Okay, 1 crore. Wow. So 1 crore is, I know, too much, but let's say, what's wrong with assuming, right? So let's say the market value of that particular shop is 1 crore, but I'll say no, I have created that reputation in the market, I have created that name. The same shop is there next to me, but over there the customers are not coming. Why? Because of the reputation, because of the name that I have created. That is my goodwill. I am not going to sell you in 1 crore, I will sell you at 1.3 crores. Okay, so 0.3 is what is the goodwill amount that the other person is going to pay me. Okay, so that purchased goodwill, not self-created goodwill. Okay, not self-created goodwill, we can show it in the books, but purchased goodwill, that person who is purchasing that shop from me and paying me extra amount for the goodwill, for the name that my business has created, he will show it in his books. Okay, so 0.3 crore, he's going to show it in his books, and he will, what he will do now, this particular, that 0.3 crores, 30 lakhs of amount which he is paying to me, that 30 lakhs of amount he needs to, use it. It's going to give benefit to him for a certain period of time, not for the whole lifetime, right? So what he is going to do every year, let's say this 0.3 crore, that is 30 lakh, is going to give him benefit for 10 years. So every year he will charge 3 lakh as an expense, which will be known as amortization. So when I talk about intangible assets, okay, similarly patent. What is patent? There is, let's say I am a scientist, and I invented something, I created some new innovation, right? Now I am not into the business, right? But I know that this innovation is nowhere. What I do, I will get my innovation patented, right? That innovation get patented, and nobody else is, can copy that thing, right? Now if I go to some business which I know, get benefit from that particular innovation, they'll pay me a royalty amount, right? So they are going to buy that innovation from me. Okay, so that is also, they can patent it and they can use it, that they have paid that amount to me, I can earn millions from it, right? Similarly trademark, let's say when I say kuch meetha ho jaye, right? It's a trademark, it's a logo of which brand? Dairy Milk, right? Have a break, have a Kit Kat. So when you see this tagline, or when you see certain brand logo, when you see that brand name, they are considered as what? Trademark. And what is a copyright? Copyright relates to the music, to the artist who creates their own innovation related, relates to the art, may it be book, may it be literature, may it be music. So these all are intangible assets. You can't see them, you can't touch them. Okay, you can't monetize also how much you are going to get it. Okay, like I know if I'm going to sell this particular mobile after 5 years, somewhere around I'll get 2,000, 3,000, 5,000. This is something. But these intangible assets, you can't say. It depends on the person at how much price he is selling these intangible assets. So when I purchase all these things, I am going to get its future economic benefits from them, right? They are going to give me future economic benefits. That is why they are considered as an asset. But we can't see them, we can't touch them. That is why they are known as an intangible assets. But these benefits, I'll get it for a certain period of time. So over a period of time, I can't charge it. Whatever amount, 30 lakhs cannot be charged as an expense in the current year, because this 30 lakhs is going to give me benefit for the next 10 years. So every year I am going to charge it as a revenue expense. And when it relates to the intangible assets, we say it amortization. Okay, now it is clear. Tangible assets, which we can see, which we can touch, we charge depreciation on it. Intangible assets, which we cannot see, which we cannot touch, are considered as an intangible assets, and we amortize them. There is an amortization cost. Next comes is depletion. What is depletion? It majorly relates to natural resources. You must have heard the term that our natural resources are getting depleted. Okay. Now, depletion means like if I'm into a coal mine business, right? It relates to what gets depleted? Mines and quarries. Okay. Now, if I am into mines business, right? Now, when I am purchasing a certain area, certain coal mine, that particular coal mine is having a particular amount of, I can extract certain particular amount. Slowly and gradually it will get depleted. It can't retrieve. Okay, if I am having a 1 lakh tons of coal mine, 1 lakh tons of mines. Okay, now out of that 1 lakh I extracted 10,000 tons. Okay, now that's 10,000 cannot be retrieved, right? So this 10,000 is depleted. What is remaining is 90,000 tons of mines. So when we say about depletion, now this can be used, let's say, for 5 years. So over a period of 5 years, whatever price I have paid for that coal mine, over a price of over a year of 5 years, I am going to charge it as an expense. So when I say depletion, depletion relates to the natural resources like mines and quarries. Okay, so these are the three terminologies: depreciation, amortization, and depletion. And I want you, like, though it is considered as a certain amount we charge in the current year for the assets, fixed assets which we are using, but I want you to clear this concept. I hope you got it. If you still face any queries, do let me know. Thank you very much.